Friday was a brutal one for tech stocks, the Nasdaq plunging 2.6%. But even with that steep sell-off, the Nasdaq is only down 1% so far this year, which isn't that bad at all, especially when you consider that the tech-heavy index rose nearly 40% in 2013. So this big drop in momentum stocks, many of which are in CNN Money's new Tech 30 index, companies like Amazon, Netflix, Facebook, Twitter. This is probably a good overdue thing. Many of these companies were trading at valuations that were extremely stretched. You see that in the biotech sector as well, which is another big component of the Nasdaq. And let's be honest here, when you consider that the Nasdaq is only, with the sell-off this year, about 5.5% off of its 52-week high, it could get worse before it gets better. We haven't had the classic correction yet of at least a 10% drop from a peak. So I'm not getting too worried just yet about this big decline in some of the large momentum tech stocks, but investors probably should be just realizing that valuations do matter. You can't continue to buy companies that are trading at triple-digit PE ratios. Look for some of the older technology companies like Microsoft, Cisco, yes, even Apple. They all pay dividends. They're going to be a little bit more secure in a market like this. And don't get too panicked. This isn't 2000 yet. The bubble isn't bursting, but this is a nice, healthy pullback.